welcome back to the IB Investor channel. Today I'll be talking a little bit about Truecaller and its most recent earnings report. And in light of the very high share price fall, as we saw during the trading during Friday, the stock went down more than 31%, almost 32% during the trading on Friday. I thought it was worth taking a further look under the hood to see what was going on. In this video, we'll cover the cash flows, the earnings, the debt situation, and the short situation for the stock. But before going into the financials, let's just have a look at the share price. So this is a chart from my stockbroker Avanza, and as we can see here, the stock has not been listed for very long. It listed here, I think, in 2021 or something like this, and the stock had a great first couple of months where we see that the share price went up very high here to 143 kronas per share. But ever since, the stock has pretty much gone down every time here. So there haven't been many periods where the investors have been able to, take some profits from this company. Obviously, if they bought from the beginning, maybe they could have taken some profits here, obviously on the way up. Maybe here, at small portions of its history, IPO investors have been able to take some earnings, but for the remainder of the time, it looks like the stock has pretty much been in a trend downwards, and this is quite annoying for investors, of course, because when the stock is just going down and down and down, you're most likely in the red, and even if you add and think that, I'm buying cheaper now than I did a couple of months ago or years ago, if the stock is still going down, chances are quite high that you're still in the red. And the drawdown from the all-time high from the stock down to this level is something like 83%. So massive drawdown for the stock, especially for investors who bought around the top here. They're probably in the red most likely. The stock currently has more than 11,000 shareholders at Avanza, so it's one of the more commonly owned shares or stocks out there on the market, I would say. Now for the sales and margins of this company. Unfortunately, I couldn't cover the EPS on this slide because since they had negative EPS for a few years, it just looks super messy on the slide, so I will leave it for the next page here. But the net sales here, we can see that they actually grew quite nicely here from 2018 up until 2022. And then for the trailing 12 months here, we can see that the net sales actually have gone down a little bit. This company also has very good margins, as you can see here. So the blue one here, the blue line, is the gross margin, and they currently sit at roughly 76%, which is very high. So this is obviously a software company. And we can also see here that the profit margin is very high here at 28.9%. But you can see here also that the trend line here, as I mentioned just a few seconds ago, the company were in the reds in terms of profits or earnings per share, and this is also supported here, as you can see, with the profit margin going into negative. So this line here is to zero, and you can see here that they were in the reds here in terms of profits. Anyways, very good margins here, and it looks like they're able to defend them here for a couple of years, and it's going to be interesting to see whether or not they will be able to defend them going forwards. Now for the EPS situation, and I also included the PE ratio just to make this slide a little bit more interesting. I think it's tough to go through this period here because the company was most likely unlisted here. Since I don't have any stock data in terms of the price going back here. So I think this was from a period when the stock was still unlisted. So when the company is unlisted, it's just a different environment. Unlisted companies don't have to think about quarterly earnings. They don't have to think about annual earnings the same way as listed company does. So I think that we can, take this period with a pinch of salt. That it looks like it was negative, but they probably did a lot of investments and didn't care so much about the earnings per share back here because it wasn't relevant. But obviously here, when the company was listed, they have had a different focus here and recalibrated. So here we can see again in the orange that the earnings per share went up to 1 kronor a share. But we can also see that the PE ratio at the same time were massively high here at 68, almost 70 PE ratio, which is very expensive for any given company, to be honest. The growth here from the next year, from 2021 to 2022, we can see the EPS growth was 40%, so that is actually quite massive in itself. And we can also see how the multiple expansion here probably went down a little bit because the share price traded at lower levels here. So here we have a P ratio of 21, which is obviously much lower than the 70 P ratio we had here. For the trailing 12 months here, we can see that the EPS was actually the same as the previous year, which is never a good sign in my opinion. But we can also see here that the stock has gone down and offered this company a much lower P multiple as a result as well. But yeah, short recap, EPS stagnant year over year. From a beginning here where it was a little bit growth, but then also here probably unlisted company situation where they just didn't care to post an EPS because it wasn't important back then. Now looking at the free cash flow margin, we can see that in the most recent quarter for the trailing 12 months, they posted a negative free cash flow margin, which is never a good sign. But there has been periods, as you can see here, that the free cash flow margin has been positive. So as late as 2020, it was positive and had been for the 3 past years. Then comparing it to 2022 here, as you can see. But also in the past, for 2018 and 2019, they had negative free cash flow margins, unfortunately. And also here we can compare it to Nokia, who has 4.2%, and Sinch that sits at a 4.3% for free cash flow margin. Now for the free cash flow in Swedish kronors per share. Now this paints pretty much a very similar picture. It would have changed a lot, I would say, if the management had printed a lot of shares. But it looks like it's very much the same as the previous picture, so nothing alarming here. All right, now for the cash flow overview. And as I mentioned previously, the company was unlisted, so I think looking back here, you won't make any sense out of it because the company was unlisted. So let's not focus so much about that, but rather from here, this period here from 2021, I think is more accurate to actually go through. And here we can see in the blue line here that we have the cash from operations going up nicely here up until 2022. But in the most recent quarter here, 2023, we can see that the trend is broken. The cash from operations is actually going down again, which is actually quite worrisome. At the same time, we can see that they're doing a lot of investments here in orange. And we can also see that it's gone up actually. But as you will see on the next slide, this company is basically debt free. So it's not a bad thing to make a lot of investments right now and try to pounce when the market is a little bit in the downs. So yeah, it's probably fine. But it can just be good to know that the cash from operations at least has been weaker now. And I'm not sure if this is going to be the trend for the coming quarters. I think it's going to be interesting to see. But when the cash flows from operations are going down, it never paints a good picture. And we can also see here that the free cash flow here in the green is going down as a consequence, again, probably because of the heavy investing here. But the free cash flow has been positive as well for some years. In 2022, it was positive in 2021. When looking at the net debt to cash from operations, we can see that this company is actually debt free. And that is why the blue lines here are negative. So when they have net debt, the bar should go in the other direction and be positive. But here we can actually see that this company is in the negative here in terms of net debt. And that means that they're debt free, basically. And we can also see here that the cash from operations, as we saw a little bit on the previous slide, were negative the first couple of years. But now it's in the positive side, even though it's declining a little bit here in the most recent quarter. But yeah, I mean, this company right now, since they are debt free, the cash from operations obviously is not so important, even though every company wants to increase it. But since they're debt free, it looks good, and there's nothing else much to say here. Now looking at the net debt to EBITDA, we can see that it's negative multiple here at 2.2, which is very good because again, just supports the picture that this company is debt free. It's not very often you get to see these kind of companies that are debt free on the Swedish stock exchange. We can also see here during this period it was unlisted, so let's not talk so much about it, but we can see how it's been basically net debt to EBITDA ratio negative for the whole period as it's been listed. So it's very good to see. So it's not just one quarter that has happened, but rather it's across the board here. And also comparing it to Sinch, which is also within the telecom business, and it has a 3.1 multiple here to net debt to EBITDA, which is very high actually in my opinion. I haven't looked into Sinch numbers, so it just from this figure alone it looks high. And then also we have Ericsson here at 0.3 times, so Ericsson is actually quite low here then. So comparing it to peers, and yeah, Truecaller, it looks very good. Now looking at the short situation, we can see that almost 8.3% of the total float is being shorted. So that is quite a high percent actually. And then also comparing it to SBB, that sits at the rank 1 at 17%, JM that sits at 15%, place number 2, and then rank 7 here, Hexatronic at 10%. Truecaller currently holds the rank 11 for the most shorted stock in Sweden. And I mean, this basically means that some investors have some ideas where the stock should be moving, and in this case it's not upwards but rather it's down. So that can be good to know that there is a lot of short interest in the stock, and considering the rank 11, it is quite shorted, I would say, in terms of some peers here. And on a personal note, I try to stay away from stocks that are where the float is so high and targeted for short positions. So if you own the stock, try to do a lot more research, because I mean you really need to be secure in your position, because it is quite dangerous to go against the short sellers. And we've seen in the past where many companies or many investors have tried to do the same, and it turns out that some of these short sellers, these firms that are doing these short sellings, have been right. For example, Wirecard, it went bust, so the company basically went to zero, went to bankrupt, because the short seller thesis was correct. We've also seen companies such as SBB that have basically, the capital has been eliminated in terms of share price for that company because of the short thesis. So you have to be careful as an investor, and you have to go to yourself and ask yourself, have I done enough research about this company, or have I not done it? And if you have not done it, you have two choices. Basically, you do more research and maybe come to a new conclusion, or maybe you should exit the stock. But I don't give any advice for how you should act in this position for Truecaller, but it can be good to know that at least most of the float here is, or not most, but 8.3% of the total float is being shorted right now, which is a lot. Now for the CEO remark, we'll begin here from the top. He's saying that they still have some user growth at a steady pace for the second quarter in a row. He's also saying that they have some growth outside of India and Africa and Middle East, which is good, I guess. And he's also saying that it's at historical high levels. They have some countries here where they're investing a lot, such as Colombia and Nigeria, to support the local managers here and support their focus to increase the local competence here, as we see. And it seems that it's in these regions here where they see a lot of growth going forwards, and obviously then a lot of profits as a consequence, and if they can steer this correctly. We can also see that he's saying that they have a weakening global ad market that affects the earnings negatively compared to the last year. If we check the balance sheet here, he's saying that they have a stable balance sheet here by 1.6 billion in cash, and also that they repurchased 19.4 million shares. I'm not sure if it's within this quarter or if he's looking back a few quarters as well where he accumulates this. I don't know, but at least he's saying it here in a remark. And this offers then a stability and possibility to make interesting acquisitions, he's saying here, going forwards. He's also open to make more repurchasing of shares, basically buying back more of their own shares, or make investments that benefit the long-term shareholder value. But we can also mention here that the net sales were down in the quarter by more than 11%, so the company is struggling a little bit. We can also see in the most recent quarter that Truecaller had a weaker profit margin, which sat at 26.4%, which was down from 31.9% year over year. So that's like 6 percentage points down year over year. So, and they had, I think it was 39.7% in Q2 profit margin. So comparing it to that, it's even worse. Then it's like 13.3 percentage points if you compare it quarter over quarter. So I think this is the reason, because as I mentioned many times before, investors get very used to the most recent all-time high profit margins, and they expect management to produce those again. So when you see profit margins falling from like 39 or almost 40%, let's say, let's round it a little bit, down to like 26% profit margin, I mean, then that's a big hiccup for investors. They're wondering how can we have gone from 40% profit margin down to like 26% profit margin, because that means that it's less money on the bottom line. And at the end of the day, it's the bottom line that feeds the investors, so to speak. So I would assume that that is the biggest risk or biggest reason why the stock went down a lot, that the profit margins, I wouldn't necessarily say that they got erased, because I mean, having a profit margin right now in the most recent quarter, 26%, a lot of industry companies would love to have that kind of profit margin. So it's not a bad one. It's just that it went down from a very, very high level down to a lower level. And remember, in Q2 then, where they had a almost 40% profit margin, for many industry companies, that's the gross margin. So this should speak some volume at least about this company, Truecaller, that they have very good margins to start with, but management here has a very important job to try to defend those margins going forwards. And I think that is what the investors are worried about right now, and sending the stock down as a consequence. There's also been some questions about the user data. That has been the short thesis, how they utilize the user data in many of these countries, such as India. But I'm not going to go through that today. I think that's for a different video. This was it for this video. Thank you very much for watching. And if you liked the video, please like and subscribe for more content. Have a nice day. Bye bye.